Stocks capped the week with a two-day winning streak. That brought the Philippine Stock Exchange Index to its best finish in 9 months. On Friday, the index broke past 6,900 for the first time since April last year. Foreign funds have been buying local equities. All metrics, trade volume and market breadth signal investors are back.
It's the optimism that the reopening story continues for the Philippines. This year, even colleges are required to do face-to-face classes. So this is why demand for eggs, demand for onions, demand for sugar is really picking up fast, and supply isn't able to keep up, causing inflation to rise.
That domestic demand will give legs to an economy under threat from increasing external headwinds. BPI Senior Vice President and economist June Neri forecasts a 5.5% growth for the economy this year. Slightly below the Marcos economic team's target, but decent enough, especially when talks of a recession elsewhere loom in the background. That forecast means the Philippines will skirt recession.
Our central scenario assumes a recession in some parts of Europe and a sharp slowdown in the United States. So not a global recession, just some select economies affected by high energy prices and the rate hikes, Louis. It also assumes it's not going to be a very deep recession.
A damper would be higher borrowing costs, as consumers and companies will think twice about spending. BPI expects the Bangko Sentral ng Pilipinas to continue its tightening policy, but without jumbo rate hikes. That's because inflation could stay elevated early this year.
Ours is just slightly higher at 4.8%, and that's because we're going to start the year pretty high. We ended 2022 at 8.1%. We will probably be close to still 8% for the first 2 months of 2023. And only start seeing meaningful deceleration starting March this year. So coming from that very high starting point, we might not still be able to hit the full year target of 4%, but at least by the end of the year, hopefully, we will already be within target. So single month prints of inflation could start to be on target between 2 to 4%.
BPI says should the BSP start to reverse policy, it will be wiser not to tweak the interest rate, but rather first cut the so-called reserve requirement ratio, or the amount of cash that banks should keep in their vaults rather than lend or invest. A cut in the reserve ratios effectively increases money supply. The peso, meanwhile, closed 30 centavos stronger against the dollar. The BPI's Neri says worries over the Philippines' current account deficit, as it imports more than it exports, will remain a drag to the local currency. BPI expects the peso to range between 55 and 56 pesos against the dollar this year. Lois Calderon, CNN Philippines.